I think we're going through a phase transition. Bitcoin's gone through many. Probably the last great one was the start of 2013 when futures arrived with BitMEX, and that changed the complete dynamic of trading. And then the next phase transition was the introduction of institutions in a big way with MicroStrategy that led a lot of credibility amongst hedge funds. So we had Ruffer Invest, any number of hedge funds and high net worth people in that space, like Ray Dalio came out and said he was investing. So there was then this validation, so a lot of spot investment from institutions and family offices, which happened in pretty much 2020, and now we're in this phase where I would say another transition where the market's maturing, getting more sophisticated. We've finally got an ETF. Unfortunately, it's a futures-based ETF. We've got significant volume on the CME futures exchange, so we've got very large, I'd say, Wall Street players that trade it on the futures market, and that is having very large influence on the price. And so that last 69,000 top, the market was still accumulating on chain, but that drive down to where we are now in the mid 30s, the first time that I've seen a significant move of this scale where on-chain lagged. So that's very interesting to me. The top was really from a different market, quite different from tail end of 2020. No matter what the futures markets were selling down on, the tidal wave of money coming in, buying spot, withdrawing into their on-chain wallets, overwhelmed the entire market. So it's interesting now, and it comes in a time where structurally we're like a lot stronger than the last top, where the whole thing capitulated under the China sort of mining ban and all this negative ESG narrative. Now it's different. It's just futures selling down while everyone's holding on to their coins. We saw a little bit of hodlers sort of divesting a bit, but nothing major. And so if you look at that in the macro terms of demand and supply, the guys that have held their coins for a long time, like 5 months or more, they're not selling. They sell once there's profit to be had. Why not, right? You've held your coins for 5 months. You're not going to sell now. So we saw a bit of that selling as we ran up to 69,000. They bought, in the sub 40. They made a nice profit. And the moment we dipped it below the 40,000, they stopped selling actually, and they started accumulating actually as a cohort. So structurally really strong. We're at peak levels of long-term holders. It's not a bear market if you look at that metric. And then in the shorter term, we're in a really interesting phase right now where you can look at the strength of the different types of cohorts of investors. You've got swing investors, you've got the hodlers. The hodlers stack, they keep accumulating. Very seldom they divest a little, but there's the speculative guys that buy and sell almost on par. They will zero out. They don't care about the asset, holding it long term. And you can compare their strength of holdings, like are they accumulating, are they dumping? You can measure their strength. And right now they're holding and accumulating, and you can compare that to the price, because there's a very strong correlation between their behavior as holders or sellers and the price, and actually it leads it. So right now we're in this really highly correlated zone with equities, very much like mid 2019, post COVID. Oh no, it wasn't even, it was just trading correlations to risk on, risk off way before COVID. So it was 2019 to 2020, we just went sideways, and it went up and down based on correlations to equity. No one really saw, unless you were on-chain analyst, no one really saw that there was a lot of accumulation coming that was not reflected in price. And so You can kind of think of the short-term price as it's a random walk. I don't believe in efficient market theory that all the information's priced in. I think of it as just a bunch of traders trading what will make them the most money. With a lot of people going short, can I squeeze them out? Or market's going this way, I'm going to trade that correlation, especially with these kind of institutional traders in there. They're going to trade these correlations because that's what they do. And so it's like this pogo stick going up and down, and whether they jump or they don't jump any one day is dependent on how they feel over equities. Bitcoin's got an internal engine of its own, which is its own adoption S-curve, right? And so we're in this, we're now in the early mainstream. So this thing's going exponential. So that thing is driving the engine house of Bitcoin. Meanwhile, you've got institutional traders that do not acknowledge that. They're not venture capitalists. They're trading correlations. On this pogo stick. They don't realize that the pogo stick's jumping up and down on a bird of land that's rising and rising based on this adoption S-curve. So eventually, it's risk off. We should short. Meanwhile, the ground won't let it. They're going to bottom out and the thing springs up. And that's what happened in October. We actually reached the fundamental valuation where the spot investors were like, I'll buy that. It's been 10,000 for so long, and they've been buying and buying for over a year. And so it bottomed out and the thing had to squeeze upwards. And now we're back in this sort of price discovery where there's spring to bounce on. If you're a spot investor and now is a good time to buy and it wicks down 50% and you're not on leverage and you're not going to get liquidated, you wait it out like we did in COVID. I honestly don't think we're going to go down that unless there's this weird white swan event that no one can see coming. On-chain says the pogo stick's bottoming out right now. It's very hard to force it down any lower. Technically, we're the RSI, which I like. The RSI trend line's broken out of a 2.5 month downtrend. And then it looks like a bump and run. It's basically, it breaks out, it comes back and tests the support, and then we're off. And we've just come back, and today we're testing the support. We had to break out. We had like this last week or so, we had this run up, and we're at trend exhaustion using like TD sequential. We're at trend exhaustion, so we need to take a break. But the last time this trend line broke out was the 29K bottom. We had like a 3-month downtrend on the RSI, and that broke out, and then following like a day or two, the price broke out and we were off to the races. So I feel like we're in that zone again. I'm just waiting. If you're going to do leverage, like sometimes I do the leverage game. Like you want to be sure that we're on up. You don't want to be early on an uptrend when it hasn't actually done that yet. It can be pretty painful.